We talked about, or issue is on page 30, and this is the state of Utah. They call it the State of Utah Legal Compliance Audit Guide, and they provide us with very specific items that they want us to look through and verify that the company is in compliance with. And they've actually revamped it, and it's kind of a whole new, it's a whole new audit guide. So it was a good learning experience for everyone this year on what they've changed and what they want to see. And on that, we did just find one instance of non-compliance on page 35. And so one of their new requirements is that the records officer of the entity has to complete a training, an online training. And we did not see that that was completed this year. So we've informed management of that, and they'll have someone take a look at that.
Actually, Bart,
It's done.
It's done.
Bart has been designated as the records officer with the state, and he has completed the training for this year.
We met with Ryan and them in their office. And when I got back to Hoover that day, I submitted the request to be the records officer. The next day we sent one with the training. So we're good to go. We'll keep it up annually.
That's all I had prepared to cover, unless anyone has any other questions.
We just might go through page 6, 7, 8, and 9. That's basically the meat of everything. We briefly kind of talk about the assets and what liabilities and what that's for.
Yeah, so page 6 is called the Statement of Net Position. This is kind of an overall view of your assets and liabilities, and then your net position. So for the current year, because we only audited 1 year, we're only showing 1 year. Next year, when we perform an audit of 24, we'll show comparative years. That will help provide a lot better information. Again, with the restatements, I don't know how much value we get out of comparing last year to this year. So that's why there's only one area. I mean, if we did try to compare it to last year, I think it was a very comparable year. We didn't see any major differences. I don't know. What did you want me to cover?
Just kind of just walk through that some bits. So each page, you don't have to go into detail, but I just want to make sure we understood what in page 7 we've got calculations. The question I had you had on page 7 says salary, wages, and benefits is 2.56 million. And then on looked on page 9, it says payments to employees is 3.3 million. The payments to employees, that include then also the benefits in your package all together. I was trying to see what the difference between payments and employments was on page 9, and wages and benefits was on page 7, it was 2.5. What additional money went into that payments to employments? Is that their retirement funds and health insurance?
Yeah, so we're kind of comparing two different items. So this is the cash flows that occurred during the year, and then the statement of revenues and expenses. So there's kind of the two different items. We have accrual accounting, which will represent actual expenses in that year, and then actual cash that went out that year. So there typically will be a difference in those parts. I don't know if you have, specifically. There's that difference.
I don't. I'd have to look into that. But we'll say this much about the statement of cash flows. It was Ryan's favorite statement.
Yeah, it was fairly a complex one to put together due to all the changes.
Changes
from last year. So all those prior period restatements. So it was.
I'll look together quiet.
It seems like if you look at page 7, you've got wages listed twice. You've got wages under cost of sale, mayor, and then the salaries, wages, and benefits. You put that together, it's 3.341. million, but then on page 9, it's only showing the 3.027 million, so we're just a gap there of about $320,000. I don't know how we would account for it, but I'm sure there's got to be some reason for it.
So that's probably the accruals, your termination benefits and compensated absences that are, that adjustment that's made there. So that's an expense that goes into 2013, but wasn't necessarily paid out.
There was no cash.
But,
There was no cash.
I thought that those terminated benefits were, when you look on page, oh, where'd it go? Sorry, how many graphs? There we go, page 20. It looks like they were 523,000, so that's a bit more than the 300,000 that we're missing.
Right, so typically the additional expense would probably only be the difference from last year to this year. So your beginning balance,
The
right?
309?
Right, so that was already expense, so you're really only taking the difference. Your 2013 expense would be the increase in that amount.
Oh, I just love it when numbers roll up though.
Yeah,
Right? When those numbers that roll up. So we're not that far off there.
no, correct. And I mean, again, I'd be glad to look into that, if Bart can look into that and give you a more, give you a detailed schedule of what those differences are.
On our depreciation on the system, we have an account set up so we borrow with that money gets set aside every year, like $1.8 million this year. We set money aside for that account, or is that just
It's just an expense.
an expense you put in there? There's not many money we're setting aside for that.
No, I mean, what you do is you create what's called a contra asset. So an asset, say it's worth $100, and then every year we're gonna take $10 of that, and we're just gonna reduce that 100 versus, we set up another account so that this is a negative amount, so that the asset is showing like $90 at the end of this year and then 80 at the end of the next. And then we write that as an expense on the other side of that entry.
It's using expense, we're not setting money aside.
So, correct.
Any money that's set aside is set aside at the time you buy that item. And so you'll put cash out the door, so that's where you set that money aside, and you put this asset on your books. But then as time goes by, you sit and you depreciate and take parts of that off. You depreciate and expense it off, so you're not writing off the whole expense of that asset in the first year. You're expensing it annually, and that just reduces the value of it slowly.
But no, the city, they have depreciation accounts, and they'll say $1 million, and they try to set that amount of money,
So they can replace it later.
replace the system.
Yeah, you can do that, we don't do that here. We usually run them down, and then when you're down, you find money and buy new. But that is a good hedge. In fact, last week when I was in training back east, that's one thing that they did talk about was cash reserve funding. A lot of utilities, public utilities, cities and stuff are actually doing that so that at the end of that cycle, there's money set aside for it. But that would have to be an entirely separate entry than the depreciation expense entry. You'd be making two entries in your general ledger if you were doing that every month.
Then where does that money really go?
There's nowhere for it to go.
I mean, that's, I'm sorry, I don't
Just-
understand
just
appreciation.
Think of it as,
We have no appreciation.
Because it's on the operating expense, but it's not a real thing. It's not like you're saying, oh, we're gonna put that money somewhere, so I don't.
right, but I mean, think of it as if you were to buy something at the beginning of the year, okay? You spent all that cash for that
Right,
right up front, right?
right,
But that something can last you 10 years.
right.
And when you're in business to try and make things look right, you need to put that over that 10 years. It's not like it's just a one-time hit, because accrual accounting doesn't allow you to use cash basis type activities. So what you're going to do is you're going to, yes, that cash went out the door immediately, but you're not gonna recognize it on your income statement all at once, otherwise your balance are off for the year, so.
I would
You
recognize
take
it in
it.
my world, but that's just.
That's because you're a cash basis operation.
Okay.
But if you run your house on accrual, you'd be driving yourself crazy with the amount of entries you make. Because, I mean, you take, for example, Harold picked up a couple new big trucks to do his line work with, okay? $500,000 over the course of the last year from now was spent on these line trucks.
And it was spent as an expense, it was on the line as far as your truck.
It was cash out the door. It wasn't spent as an expense yet, because that's gonna benefit us for 5 years
So
or
it
so.
wouldn't show up on here, truck expense, you're only gonna show that.
Now, that doesn't, I mean, it brings up, it would show up on this guy, statement of cash flows,
Okay.
because you'll see $500,000 going out the door in cash. But it's
But on
not gonna
operating
show up
expenses,
as an
you're only
operating.
gonna show
You're only
a
gonna show
portion of-
1/5 of that.
1/5 of it.
So you'd only
I
show
see.
100,000. So what it does is it allows you to defer the expense of that to the period of time in which you utilize that asset.
I see.
So, I mean, in a home, you expense everything off immediately, and you don't care if it lasts you 50 years or 2 months, depending on the item. But in a business, you have to match your revenues to your expenses. So depreciation allows us to do that.
I see. I was just, okay, so you show it on some of
They
it.
have
Yeah.
a depreciation schedule, Bart.
We do.
I think that's something I need to see. I'd like to see, I've gotten one from the city and it was like 30 pages long, you know?
We're pretty
How
good.
long is yours?
It's about right. It's ugly.
I don't think we didn't put depreciation in for 2013, did we?
Yeah. 1.8 million.
1.8.
Okay, we didn't put it in for January though, yet.
Yeah, it got booked. We booked it in March. January, February, and
Booked.
March, we booked all 3 months worth of depreciation.
Oh, you totaled it.
Yeah,
Thank you.
yeah, because, I mean, I started on February 20th, and there was such a, and Ryan can attest to this, that our capital assets were of such concern. And like I said, that's probably one of my biggest projects to work on for this year, is to make sure that our capital asset schedule is true and accurate. But I was reluctant to book a depreciation entry I wasn't here in January, and I wasn't even comfortable doing one in February until I had a good understanding as to even what entries were going to be proposed to clean up the books for prior years. So I held off, and then once we had a good schedule that could be depreciated and recognized in 2013, then I started making the entries. So, but yeah, in fact, if you look at the financial statement, we'll send you a new one next Friday, but you'll see that there's a big chunk in March, and then a lesser amount in April.
Can we ask one more question on that? Credit card fees, $70,000 fees, is that just like to use the credit cards? $70,000.
It's what it costs to process, and if you pay your bill with a credit
Oh,
card.
like the
Is that what it
percentages,
is?
like when people pay the bill, it's the percentage of
So
the
it's
pay.
costing the company 70 grand.
It's
to
not
take
us
credit
running
card.
out the bill, it's our ratepayers.
Right, because you have to pay the percentage
American
to them.
Express.
That 3% or whatever it
That
is.
makes sense. It's a lot, isn't it?
Why do we take American Express?
Yeah, we should.
So
I was gonna
high.
say, they're high. I use
It's a
them.
big chunk. Go to bill pay at your bank.
I know.
It's cheap, that's free.
Bad debt expense, sorry, that's
So
not.
with my American
Did we approve this last meeting, Alan?
We did the draft,
They must like you.
we're probably
They don't
gonna
like
do the
you.
final
Oh,
approval.
I was trying to do collections and go after.
I figured we approved the whole thing. I was totally convinced that it wasn't gonna change.
Oh, right,
It
it did.
didn't change.
Well, it did. Well, yeah, of course.
Well,
That
Mike,
was
we
big.
don't have territory.
We don't have cities either.
Yeah, we have to write out like 7,000.
Is it appropriate this time? I'd like to make a motion that we go ahead and approve the annual audit for 2013 as submitted.
I will second that motion.
First, anybody have discussion on the motion as stated? All those in favor of accepting the 2013 final audit report, say aye.
Aye.
Any opposed? Motion carries, so final two can get into the audit report.
Thank you. I'd just like to say, we had a great experience with management. They were very open to all of our suggestions of improvements. They were very willing to change everything, and I think that was the only redeeming factor in this audit. So, I think you have a great team of management, and we really look forward to working with them more. And it's great to see a board that's actually involved in asking good questions. And you are a very big part of the oversight of the entity. So I'd just like to commend you. It's good to see, and I'm excited to work with everyone.